200. Overall objective of independent auditors and conduct of an audit in accordance with essay. Introduction. Purpose of an audit is to enhance degree of confidence of intended users in financial statements. Hence, this essay requires auditor to obtain reasonable assurance whether financial statements are free from material misstatement. Reasonable assurance is high level of assurance to reduce audit risk to an extremely low level. It is not an absolute level of assurance because there are inherent limitations of audit. Due to inherent limitations of audit, there is an unavoidable risk that material misstatements of financial statement may not be detected even though audit is properly planned and performed as per essays. However, inherent limitations of audit are not justification for auditor to be satisfied with less than persuasive audit evidence. Inherent limitation: nature of financial reporting, nature of audit procedure, need for audit to be conducted with reasonable time and at a reasonable cost. Professional skepticism and professional judgment. Professional skepticism: it is attitude that includes questioning mind, being alert to the condition that indicate mistreatment due to error or fraud, and a critical assessment of audit evidence. Auditor shall plan and perform audit with professional skepticism. Professional judgment: it is a it is application of relevant training, knowledge, and experience provided by auditing, accounting, and ethical standards for making informed decisions. Auditor shall exercise professional judgment in planning and performing audit. Fundamentals responsibilities of management and TCW relating to conduct of audit. Preparation and presentation of financial statement as per FRF, including design implementation of internal control, provide auditor all informations to prepare all information relevant to preparations and presentation of financial statement. Any additional information that auditor requests from management or TCW. Unrestricted access to those within the entity from whom auditor can obtain evidence. Certain assertions or subject matters wherein it is difficult to detect material misstatement due to potential effects of inherent limitation. Certain assertions or object matters where it is difficult to detect material misstatement due to potential effects of inherent limitations include fraud involving senior management or collusion, existence and completeness of related party relationships and transactions, occurrence of non-occurrence with laws and regulations, future events or conditions that may cause entity to cease to continue as a going concern. SA 200 ended. SA 210, agreeing the terms of audit engagement. As per this essay, objective of auditor is to accept or continue to audit engagement only when preconditions for an audit are present and there is a common understanding between auditor and management or TCWG DG about terms of audit engagement. Preconditions for an audit. To establish whether preconditions for an audit are present, auditor shall determine whether financial statements are applied as in preparation of financial statement is acceptable, obtain agreement from management that acknowledge and its responsibility for preparation of financial statements as per FRF, including design, implementation, and internal control, provide auditor all information related to preparation of financial statements. Additional information that auditor request from management or TCW, unrestricted access to those within entity from whom auditor can obtain. ये सेम था इसके पहले, ऐसे 200 में ही था. हाँ, ये था फंडामेंटल रिस्पॉन्सिबिलिटीज ऑफ मैनेजमेंट में ये तीनों चीज़ें कवर होती है. मतलब प्री कंडीशंस ऑफ ऑडिटिंग और फंड इज इक्वल टू फंडामेंटल्स ऑफ रिस्पॉन्सिबिलिटीज ऑफ मैनेजमेंट. Agreement on audit engagement terms, audit engagement letter, and what does it contains. Auditor shall agree terms of audit engagement with the management or TCWG. Agree terms of engagement shall be recorded in audit engagement letter and shall include objective and scope of audit of financial statement, responsibility of auditor, responsibilities of management, identification of applicable FRF for preparation of financial statement. If management or TCWG impose a limitation on scope of auditor's work in terms of audit engagement and auditor believes that limitations will result in disclaiming of an opinion on financial statement. Auditor shall accept such limited engagement circumstances that may warrant the revision in terms of audit engagement factors where it is appropriate to revise terms of engagement or to remind entity of existing terms. Any indications that entity misunderstands the objective and scope of audit, any revised or special terms of engagement, recent change in senior management, significant change in ownership, significant change in nature and size of entity's business, change in legal or regulatory requirement, change in FRF adopted in preparation of financial statement, change in other reporting requirements. So, किसका था ये factors here? It is appropriate to revise terms of engagement. क्या entity मिसअंडरस्टैंड हो जाता है, स्पेशल टर्म्स रिवाइज हो जाती है, चेंज इन सीनियर मैनेजमेंट हो जाता है, नहीं तो सिग्निफिकेंट चेंज इन ओनरशिप हो जाता है, नेचर एंड साइज ऑफ बिजनेस मतलब बिजनेस का नेचर और साइज चेंज हो जाता है, चेंज इन लीगल एंड रेगुलेटरी मतलब लीगल और रेगुलेटरी रिक्वायरमेंट्स FRF अच्छा अदर रिस्पॉन्सिबिलिटी ओके. AC210 ended. AC220 quality control for an audit of financial statements. Introduction. This essay deals with responsibilities of auditor regarding quality control procedures for audit of financial statements. Auditor has implemented quality control procedures at audit engagement level that provides him with reasonable assurance that audit complies with professional standards and legal requirements. Some important definitions: firm, sole provider partnership or any entity of CA's engagement partner, full-time practicing CA in firm who is responsibility for audit engagement team, all personnel performing audit engagement quality control review, any person with sufficient experience and authority to evaluate judgments and conclusions made by audit engagement team, responsibilities of engagement partner in connection with in responsibilities of engagement partner in relation to an audit engagement to ensure compliance with independence requirements that apply audit engagement partner shall obtain relevant information to identify circumstances that create threats to independence, evaluate information on identified breaches of firm independence policies and procedures, take appropriate action to eliminate such threats or reduce them to acceptable level by applying safeguards. Engagement partner shall ensure that audit documentation review is being performed as per firm's review policies. For engagement quality control review, engagement partner shall determine that EQCR has been appointed, discuss significant matters arising during the audit engagement with EQCR, not date the auditor's report until engagement quality control review is completed. Responsibilities of engagement quality control reviewer: evaluation of engagement teams, assessments of firm's independence in relation to audit engagement of listed entity, discussion of significant matters with engagement partner, review of selected audit documentation, review of financial statement and proposed auditor's report, evaluation of conclusion reached in formulating the auditor's report. Essay 220 ended. Essay 230 Audit documentation. Introduction. This essay deals with auditor's responsibility to prepare audit documentation for audit of financial statement. Audit documentation means record of audit procedures performed, relevant audit evidence obtained, and conclusions auditor reached. Terms such or working papers or work papers are also used. Purpose of audit documentation: assisting engagement team to plan, perform, and supervise audit, enabling engagement team to accountable for its work, retaining record of significant matters for future audit, enabling conduct of quality control review and external inspections. Timely preparation of audit documentation. Audit documentation should be prepared on timely basis. Documentation prepared after audit work has been performed are likely to be less accurate than documentation prepared at the time when such work is performed. मतलब आफ्टर ऑडिट परफॉर्म डॉक्यूमेंटेशन अगर ऑडिट परफॉर्म होने के बाद किया तो लेस एक्यूरेट हो सकता है, बट डॉक्यूमेंटेशन उसके पहले ड्यूरिंग ऑडिट बनाया तो अच्छा रहता है, ऐसे ही बोलना है ना, लाइक लिटिल लेसर देन, मतलब इससे लेस एक्यूरेट होता है. ओके. Form, content, and extent of audit documentation. Factors influencing the amount of working papers required to be maintained for audit. Form, content, and extent of audit documentation depends on following factors: size and complexity of entity, nature of audit procedure to be performed, identified risk of material misstatements, significant of audit evidence obtained, nature and extent of exceptions identified, need to document a conclusion not determinable from evidence obtained, audit methodology and tools used, timely preparation of audit documentation. Documentation of compliance with essays. Audit documentation provides evidence that audit complies with essays. However, it is neither necessary nor practicable for auditor to document every matter. It is unnecessary for auditor to document separately compliance with matters for which compliance is demonstrated by documents included within audit file. For example, existence of documented file audit plan demonstrates that auditor has planned the audit. Existence of signed engagement letter in audit file demonstrate that the auditor has agreed terms of audit engagement with management or TCWG. Auditor's report containing qualified opinion demonstrate that auditor has complied with requirement to express qualified opinion in relation to requirement that apply generally throughout the audit, such as professional skepticism. There are number of ways in which compliance with them may be demonstrated within audit file. मतलब क्या था ये? It is unnecessary for auditor to document separately compliance with matters for which compliance is demonstrated by documents included within audit file. मतलब ऑडिट फाइल में क्या क्या होना चाहिए? डॉक्यूमेंट ऑफ ऑडिट प्लान, signed off engagement letter, agreed reports containing qualified opinion, complied, number of ways which compliance. Okay. Assembly of final audit file. Auditor shall assemble final audit documentation in an audit file and completed administration process on a timely basis within 60 days after date of auditor's report. Uh, After assembly it is completed, auditor shall not detect or discard audit documentation of any nature before end of its retention period, which is not shorter than 7 years from the date of auditor's report. It is if auditors finds necessary to modify or add documentation after completion of assembly of final audit file, auditor shall document specific reasons for making them, when and by whom they were made, reviewed. Ownership of audit documentation. Auditor's responsibility to provide access to working papers. As per SQC 1, audit documentation is property of auditor. Auditor may, at its discretion, make proper portions of working papers available to client and third parties, provided such disclosure may not be undermine validity of work performed and independence of auditor or his personnel. However, if there is a request by regulator to provide access to working papers, it has to be complied with after informing the client. Therefore, it is auditor's responsibility to provide access to his audit working papers to regulator, whereas it is at the auditor's discretion to make portions of his working paper to client and third parties. इसी 230 ended. ये क्या था? ओनरशिप ऑफ ऑडिट डॉक्यूमेंटेशन, मतलब क्लाइंट्स एंड थर्ड पार्टीज. ओके. इसे 240. The auditor's responsibility relating to fraud in an audit of financial statements. Introduction. This essay deals with auditor responsibility relating to fraud in audit of financial statements. Misstatements in financial statement can arise from fraud or error. Fraud in an internal act by one or more individual among management or TCWG employees of third parties to obtain unjust or illegal advantage, whereas error is an unintentional act. Auditor shall concern with fraud that causes material misstatement in financial statements. Two types of intentional misstatements are relevant to the auditor: misstatements resulting from fraudulent financial reporting, misstatement resulting from misappropriation of assets. Okay. Responsibilities and duties of management and auditor in case of fraud. Responsibility of management or TCWG. Primary responsibility for prevention and detection of fraud is of management or TCWG of entity. Responsibility of auditor. Auditor is responsible for obtaining reasonable assurance that financial statements as a whole are free from material misstatement, whether caused by fraud or error. Due to inherent limitations of audit, there is an unavoidable risk that some material misstatements may not detect even though audit is properly performed, planned and performed as per SS. A risk of not detecting material misstatement resulting from management fraud is greater than employee fraud because of management can manipulate accounts records and present fraudulent financial information or override control procedures. Audit shall identify and access risk of material misstatement due to fraud at financial statement level and assertion level, and shall determine overall responses to address assessed risk of material misstatement due to fraud. Auditor shall report fraud as per Section 143 subsection 12 of the Companies Act 2013 and Clause 11 of Para 3 of CAR 2020. Fraudulent financial reporting. Fraudulent financial reporting involves intentional misstatements or omission of amounts or disclosures in financial statements to deceive users of financial statement. It may be accomplished by using manipulation, falsification, or alteration of accounting records, misrepresentation, or intentional omission of significant information in financial statements. Intentional misapplication of accounting principle. It often involves management override of controls. Fraud can be committed by management overriding controls using techniques such as recording fictitious journal entries inappropriately, adjusting assumptions and changing judgments, omitting advancing or delaying recognition of transaction in financial statement, concealing or not disclosing facts, engage in complex transactions, altering records and terms. Misappropriation of assets. Misappropriation of assets involve theft of entity is assets, and it is pre- perpetrated by employees in small and immaterial accounts. It can also involve management who are able to disguise and conceal misappropriations in ways that are difficult to detect. It may be accomplished by following: embezzling receipts, stealing physical assets or intellectual property, causing entity to pay for goods and services not received, using entity's assets for personal use. Fraud risk factors. Fraud risk factors means events or conditions that indicate incentive or pressures to commit fraud or provide an opportunity to commit fraud. Hence, fraud risk factors are classified accordance to three conditions: incentive or pressures, opportunities, and attitude or rationalization. Fraud risk factors can be related to misstatements arising from fraudulent financial reporting, misappropriation of assets. Examples of fraud risk factors relating to fraudulent financial reporting are incentive or pressures, high degree of competition, significant declines in customers' demand, recurring negative cash flows or operating losses, new accounting, statutory, or regulatory requirements, need to obtain additional debt or equity financing to stay competitive. Opportunities. Significant related party transactions. अच्छा, opportunities किस में है क्या है ये? Examples of fraud risk indicate fraud risk factors relating to fraudulent financing, मतलब incentive of pressures, opportunities, attitude और rationalization. अभी incentive पढ़ लिया, opportunities पढ़ते हैं. Opportunities, significant related party transactions, not in ordinary course of business, significant estimates that involve subjective judgment, significant unusual or highly complex transactions, significant bank accounts or branch operations in tax haven jurisdictions. ये opportunities हो सकते हैं fraud करने के लिए. Attitude or rationalization, non financial management, excessive participation in accounting policy selections, uh, known history of violations of laws and regulation, excessive interest by management in stock price or earning trends, management failing to remedy known significant deficiencies in internal control on a timely basis, recurring attempts by management to justify inappropriate accounting. Examples of fraud risk factors relating to misappropriation of assets are, तो अभी क्या पढ़ा हमने, वही है सर, हमने पढ़ा फ्रॉडुलेंट फाइनेंशियल रिपोर्टिंग के लिए कौन सा है, और ये कौन सा है, मिस अप्रोप्रिएशन ऑफ एसेट्स के लिए कौन सा है। ओके 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 ओके। अच्छा, दो टाइप के फ्रॉड होते हैं ना यार, मिस फ्रॉडुलेंट फाइनेंशियल रिपोर्टिंग, और दूसरा कौन सा था ये, मिस अप्रोप्रिएशन ऑफ एसेट्स। ओके 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 ठीक है। तो फिर अभी हम सेकंड वाला पढ़ रहे हैं। एग्जांपल्स ऑफ फ्रॉड रिस्क फैक्टर्स रिलेटिंग टू एग्जामिनेशन ऑफ एसेट्स आर इंसेंटिव ऑपरेशंस, पर्सनल फाइनेंशियल ऑब्लिगेशंस में क्रिएट pressures on management and employees to misappropriate assets. Adverse relationship between entity and employees may motivate employees to misappropriate assets. Adverse relationship may be created by future layoff, recent changes to benefit plans, rewards inconsistent with exceptions, opportunities. Certain circumstances may cause misappropriation of assets such as large amounts of cash in hand, inventory is of small size and high value, fixed assets are of small size and high value, inadequate internal control over assets, attitude or rationalization, disregard for personal control, behavior indicating dissatisfaction, changes in lifestyle, impossibility to continue the performance of auditor. As a result of misstatements resulting from fraud, auditor encounters exceptional circumstances that bring questions to auditor's ability to continue performing the audit. Auditor shall determine professional and legal responsibility to report the person who's who made who made audit appointment or regulatory authority regarding fraud, consider to withdraw from the engagement if withdrawal is legally permitted. If auditor withdraws, discuss with appropriate level of management or TCWG regarding auditor's withdrawal and reasons for withdrawal. Determine professional and legal requirements to report the person who made audit appointment or regulatory authority regarding auditor's withdrawal and reasons for withdrawal. SA 250. Considerations of laws and regulation is an audit of financial statement. Introduction. This essay deals with auditor's responsibility consider laws and regulations performing audit of financial statement. Auditor is not responsible for preventing non-compliance and cannot be expected to detect non-compliance with all laws and regulations. Non-compliance means act of omission or commission by entity, either intentional or unintentional, which are contrary to prevailing laws or regulation. It does not include personal misconduct unrelated to business activity of entity by management or TCWG or employee. Responsibility of management or TCWG for compliance with laws and regulations. Ensure that entity's operations are conducted as per provisions of laws and regulations. For this entity may implement following policies and procedures that assist in prevention and detection of non-compliance with laws and regulations, monitoring legal requirements and ensuring that operating procedures are designed to meet these requirements, instituting and operating opportunity systems of internal control, developing, publicizing, and following code of conduct, ensuring employees are properly trained and understand code of conduct, monitoring compliance with code of conduct, engaging legal advisors to assist in monitoring legal requirements, maintaining registers of significant laws and regulations and record of complaints. Role or role or responsibility or objective or duties of auditor in relation to compliance with laws and regulations by the entity. In limitations on auditor's ability. In case of laws and regulation, potential effect of inherent limitations on auditor's ability to detect material misstatements are greater due to following reasons. There are many laws and regulations that do not affect the financial statements and not captured by entities' information systems. Non-compliance may involve conduct designed to conceal it, such as collusion, forgery, or intentional misrepresentations made to auditor. Whether the an act constitutes non-compliance is ultimately a matter for legal determination of a court of law. Auditor's responsibility क्या है इस केस में? Responsibilities relating to compliance with those laws and regulations that have direct effect on determination of material amounts and disclosures in financial statements. अच्छा डायरेक्ट इफेक्ट है उनका ना, ठीक है. As per part of obtaining understanding entities and understand and its environment, auditor shall obtain general understanding of legal and regulatory framework of application to entity and industry in which entity operates, how the entity is complying that framework. Auditor shall obtain sufficient appropriate audit evidence regarding compliance with law with those laws and regulations that affect direct and material that have direct and material effect on financial statement. Auditors shall perform following audit procedures to identify non-compliance that have material effect on financial statements, inquiring of management or TCWG whether entity is compliance with laws and regulation, inspecting correspondence with regulatory authorities. Auditor shall request management or TCWG to provide written representation that all known instances of non-compliance have been disclosed to auditor. Responsibilities relating to those laws and regulations that do not have direct effect on financial statement but their compliance is fundamental to operating aspects of business. Example, labor laws. Auditor responsibility is limited to identify non-compliance that may have material effect on financial statements, ensure penal provisions duly disclosed by entity, express qualified or adverse opinion if he concludes that non-compliance has material effect on financial statement but not reflected in financial statements. Indications of non-compliance with laws and regulations. When auditor has informed about following matters, it may be indication of non-compliance with laws and regulations. Investigation by regulatory organizations and government departments or payment of penalties. Payment for or unspecified services to consultant related parties or government employees, sales commission or agent fees that appear excessive in relation to those ordinarily paid by entity, purchasing at prices significantly above or below market price, unusual payment towards legal and retainership fees, unusual transactions with compliance with companies registered in tax havens, payment for goods or services made other than to the country from which goods or services originated, payment without proper exchange control documentation, existence of information system which fails by design or accident provide sufficient evidence, unauthorized transactions or improperly recorded transactions, adverse media comment. Audit procedures to be followed when non-compliance is identified or suspected. If auditor has informed about non-compliance, he shall obtain understanding of nature of act and circumstances in which it has occurred and further information to evaluate the possible effects on financial statements. If auditor suspects non-compliance, he shall discuss matter with management or TCWG If they do not provide sufficient information, and effect on of non-compliance may be material on financial statement, auditor shall consider to obtain legal advice. If sufficient information about suspected non-compliance cannot be obtained, auditor shall evaluate effect on auditor's opinion. Reporting responsibility of auditor for non-compliance of laws and regulation in audit of financial statement pertaining to reporting of identified or suspected of non-compliance. Acha. Reporting non-compliance to TCWG. Auditor shall communicate TCWG with matters involving non-compliance that come to auditor's attention during audit of audit other than when the matters are clearly inconsequential. If non-compliance referred above intentional and material, auditor shall communicate the matters to TCWG as soon as practicable. If auditor suspects that management or TCWG are not involved in non-compliance, he shall communicate matters to next higher level of authority in entities such as auditor committee or supervisory board. Where no such authority exists, auditor shall consider to obtain legal advice. Reporting non-compliance in auditor's report. If auditor concludes that non-compliance has material effect but not reflected in financial statement, he shall express qualified or adverse opinion. If auditor is precluded by management or TCW from obtaining audit evidence, evaluate evaluate whether non-compliance has occurred, he shall express qualified or disclaimer of opinion on basis of limitation of scope. Reporting non-compliance to regulatory and enforcement authorities, auditor shall determine whether he has responsibility to report non-compliance to parties outside entity. SA 250 ended. SA 260. SA 260. Communication with those charged with governance. TCWG. This essay deals with auditors' responsibility to communicate with those charged with governance in audit of financial statement. TCWG, though persons with responsibility for overseeing the strategic directions of entity and obligations related to accountability of entity. TCWG may include management person with executive responsibility for conduct of entities operations. Form of communication. If in auditor's judgment oral communication would not be adequate, he shall communicate in writing with TCWG. Matters to be communicated by auditor to TCWG. Auditor's responsibilities relating to financial statement audit. Auditor shall communicate responsibilities of auditor in relation to financial statement, that auditor is responsible for forming and expressing an opinion on financial statement that have been prepared by the management with the oversight of TCW. Audit of financial statements does not relieve management or TCW of their responsibilities. Planned scope of timing of audit. Matters to be communicated. May auditor's responsibility relating to financial statement, planned scope and timing of audit, सिग्निफिकेंट फाइंडिंग्स फ्रॉम ऑडिट, ये तीन मैटर्स कम्युनिकेट करना होता है. तो पहले तो हमने पढ़ लिया. दूसरा है प्लान स्कोप एंड टाइमिंग ऑफ ऑडिट. ऑडिटर शैल कम्युनिकेट विथ TCWG an overview of planned scope and timing of audit, significant findings from audit. Auditor shall communicate with TCWG auditor's views about significant qualitative aspects of entities' accounting practices, including accounting policies, accounting estimates, and financial statement disclosure. Significant difficulties encountered during audit. If any TCWG is not involved in managing entity, significant matters arising from audit that are discussed with management, written representations the auditor is requesting, other matters arising from audit that in auditor's judgments are significant to oversight of financials reporting process. Significant difficulties encountered during audit. Significant difficulties encountered during audit may include matters such as significant delays by management or unwillingness to provide unnecessary information, unreasonably brief time within which to complete the audit, extensive unexpected effort required to obtain appro- sufficient appropriate audit evidence, unavailability of expected information, restrictions imposed on auditor by management's unwillingness to make its assessment of entity's ability to continue as going concern, communication regarding key audit matters to TCWG. Auditor shall communicate key audit matters with TCWG on a timely basis. However, auditor may communicate preliminary views about key audit matters while discussing planned scope and timing of audit. Communication of key audit matters with TCWG enables them to be made aware of such matters and provide them an opportunity to obtain necessary further clarification. It provides opportunity to TCWG understand basis for auditors' discussion about such matters. It also enables TCWG to consider whether new or enhanced disclosure may be useful. Additional communication in case of listed entities regarding independence. In case of listed entities, auditors shall communicate with TCWG. Statement that engagement team and others in firm complied with relevant ethical requirements regarding independence. All relationship and other matters between firm and entity that may affect independence. It includes total fees charged during the period covered by financial statement, related safeguards applied to eliminate identified risk to independence or reduce them to an acceptable level. SA 260 ended. SA 265 communicating deficiencies in internal control to TCWG and management. This essay deals with auditor's responsibility to communicate to TCWG and management about deficiencies in internal control that the auditor has identified in audit of financial statement. This kind of communication is also known as letter of weakness. Auditors shall identify deficiencies in internal control and determine whether they are significant deficiencies. He shall communicate in writing significant deficiencies on a timely basis to TCWG. Deficiency in internal control: when a control is designed to implement or operated in a way that is unable to prevent, detect, and correct misstatements in financial statement on a timely basis when it is missing. Significant deficiencies in internal control. Significant deficiency in internal control means deficiency in internal control that is of sufficient importance in auditor's judgment to merit attention of TCWG. Matters to be considered in determining whether a deficiency in internal control constitutes a significant deficiency. Likelihood of deficiencies leading to material misstatement in financial statements in future. Susceptibility to loss or fraud or of related asset or liability. Subjectivity and complexity of determining estimated amount. Financial statements amounts exposed to deficiencies. Volume of activity that occurred in account balance or class of transactions. Importance of controls to financial reporting process. General monitoring controls. Controls over prevention and detection of fraud. Controls over selection and application of accounting policies. Control over significant transactions with related parties. Controls over significant transactions outside the entity's normal course of business. Cause and frequency of exceptions detected. Inherent interactions of deficiencies with other deficiencies in internal control. Indications of significant deficiencies in internal control. Evidence of ineffective aspects of control environment, such as indications that significant transactions are not appropriately scrutinized by TCWG, indications of management fraud not prevented by internal control, management's failure to implement action on deficiencies previously communicated. indications of significant deficiencies in internal control. ठीक है. Absence of risk assessment process, evidence of ineffective entity risk assessment process, evidence of ineffective response to identified significant risk, misstatements detected by auditors response procedures that were not prevented, detected and corrected by entities internal control, disclosure of material misstatements due to error or fraud as prior items in P&L, evidence of management's inability to oversee preparation of financial statements, matters to be communicated regarding deficiencies in internal control. Important points to be kept in mind while drafting letter of weakness. Auditors shall include in written communication of significant deficiencies in internal control, descriptions of deficiencies and their potential effects, sufficient information to enable management or TCWG to understand deficiencies. Important points with regard to letter of weakness are as follows. The letter lists the area of weakness in system and offers suggestions for improvement. It should clearly indicate that it discussion only weakness which came to auditor's attention. This letter serves as a valuable document for management for revising the system and its strict implementation. The letter may also serve minimizing legal liability resulting from weakness in internal control. Essay 265 ended. Essay 299 joint audit of financial statements. This essay deals with auditor responsibility accepting appointing as joint auditor. A joint auditor audit means audit of financial statement of an entity by two or more auditors describing as joint auditors. This essay does not deal with relationship between principal auditor of entity and another auditor of component that is divisions, branches, subsidiary, joint venture, association, etc. included in financial entity. Responsibility and coordination among joint auditors. If joint auditors are appointed, they shall divide audit work themselves by mutual discussion. Division of work among joint auditors shall be documented and communicated to entity. Each joint auditor is responsible only for work allocated to him, whether or not he has made a separate report on work performed by him. All joint auditors shall be jointly and severally responsible for work not divided, decision taken by all joint auditors, matters brought to notice एंड उनका सबका एग्रीमेंट हो चुका है उस चीज़ पे, मतलब मैटर्स brought to notice of joint auditors by any one of them and which there is agreement among joint auditors for examining that financial statements of entity comply with requirements of relevant statute, for ensuring that audit report complies with requirement of relevant statute. In respect of common areas, all joint auditors are only responsible for appropriateness of nature, timing and extent of audit procedures agreed among them. It is individual responsibility of each joint auditors to evaluate system of internal control relating to work allocated to him. Each joint auditor is entitled to assume that other joint auditors have carried out their work as per SA, and therefore it is not necessary to review the work performed by other joint auditors. Reporting by joint auditors. Before finalizing audit report, joint auditors shall discuss and communicate their respective conclusions with each other. Normally, joint auditors are able to arrive at an agreed report. However, if joint auditors are in disagreement with regard to any matter, each one of them should express their own opinion through a separate report. A joint auditor is not bound by views of majority of joint auditor regarding matters to be carved in report and should express his opinion in separate report in case of disagreement. AC200 series entered.